Hello, everybody. Welcome to the live stream. What a week it has been. Holy banana bread. Certainly, we've had a really interesting week, in my opinion. There's been some whole. Listen to that. I have. Just give me 1 second, folks. There we go. Anytime I am going to give away some memberships, I actually have to have another window open that has the YouTube of this stream. So I have that open and I forgot to mute it. So that is all on me. What was I saying? Oh, I know what I was saying. So we have had a very interesting week. There's not been a lot happening, to be honest, but the stuff that has happened has been pretty cool. So we got a few different news stories we're going to cover tonight. We're going to just go wherever you guys want to go at the same time. And I see chat's more active before we even started than it normally is. So let's just quickly touch with chat, and then we'll maybe get into we'll get into something here. Just give me 1 second. We got Larry Summers in the house. Excited for my first session on this channel. Wow, Larry, I love it when people come in for the first time. So welcome. And Jordan is welcoming you as well. Enid is in the house. Hello, Enid. Another hello from Jordan. All right. And I did, just before the stream started, I dropped the first free membership, and that went to Michelle. So Michelle got the first one. That's fantastic. We got a few more. We're going to do them in a little bit. Not too long. I'm not one of those people who are like, you got to wait till the end of the stream to see who wins. I'm like, let's just get it over with. That type. So the whole idea of the memberships, just to give you guys a general idea, when you do get a free membership, what that does is it gives you access to, extra content. So every time I make a trade, or anytime I receive a dividend, things like that, I send out a little bit of information to the channel membership peeps. And I also do an exclusive video that they get to vote on every single month. So they get a free video coming up. The next one, I believe, it's normally the second Saturday of the month, so it's coming up. So I have to actually reach out to the channel members and get them to vote. So if you win, one of you guys wins, whichever one, if you guys win a channel membership, you'll get to vote on what it is you want me to do for this video, and I'll get it done for you. Working Bulldogs is in the house. Hello, my second time here, and my name is Lisa. Well, hello, Lisa. Fantastic to see you. And I'm thinking you're a fan of Bulldogs, maybe. So that's kind of cool. So we do have a lot of different news stories to bring up. But before we do that, I just want to get the memberships out of the way, because then I don't have to worry about that other window. So let's do this. Let me just pull this up. And I'm gonna drop 5. I'm going to drop 5. So we're going to see. We're going to see right now, here in a second. It's just processing. All right. We'll know in a second who our lucky winners are. And you don't have to actually be in the chat to win, which is fantastic. I don't know exactly how the algorithm picks the winners, but I think it goes by just the fact, I don't know if it's interaction or something like that, but let's take a look. Holy banana bread. No, look at this. Larry Summers. Your first time here and you won a membership. So Larry Summers, the friggin' Oracle, Mike B, Chili Dog, and Michael Broman. Congratulations. Congratulations, you guys. That's awesome. All right. So, of course, in addition to the free stuff, you also get to have your name a solid color instead of that gray when you're in the live stream. So that is a fantastic. Awesome. So that's great. I'm glad that you guys got that. That is, that's all done now. All right, we're going to jump quickly to our first story. Obviously, the first story is, of course, the U.S. Fed. They had their big interest rate hike this week. They went up 25 basis points. So that's their 9th straight time in a row. Takes the federal funds rate up to 5%. So that federal funds rate, that is the rate that the banks have to charge an interest to move money between them. So any bank loans to another bank, 5%. Now, when they loan to just a regular American folk, they, of course, will use another rate called the prime rate, and it's higher, probably 7-8%, maybe even higher. Sometimes, and here's the thing, the way banks will handle their interest rates is if your credit rating is not so good, they'll charge you even more because you're higher risk, so you'll be charged a higher interest rate. Now, the interesting thing, though, that did come out of this is that Powell did express some caution, and he said that because of the recent banking crisis, he's indicated that hikes could actually end soon, but he has also said that the fight against inflation isn't over yet. Now, there are some people in the U.S. who are not very happy that he did raise it. There's been at least one Senator Warren who has been very vocal in the news, saying that he is not right for the job and he has been messing up everything he's been touching. Whether that turns out to be true or not, we'll find out eventually. But the banking crisis, yeah, it was definitely a big thing and certainly something that needs to be addressed. We had douche. We had douche bank, a German word, not the other thing. So douche bank apparently had a little bit of a drop on Friday. But now this is not actually one to worry about. I think people sort of overreacted when they saw it dropping, thinking it was perhaps another Swiss, or Credit Suisse, but it wasn't. They have actually had they've been on a long profit streak. They're doing well. So it's nothing to be super concerned about. But one report that does kind of scare me a little bit is Fortune magazine came out with a report saying that the U.S. banks right now are sitting on $1.7 trillion in unrealized losses. So, that's one of those things that where it's unrealized, it means that it doesn't have to be a loss. Once, of course, we recover and we move out of the bear market and we start moving into a more bullish territory, that should hopefully fix things up a little bit. So I'm not super concerned about that. All right, let's see what we got here. Banking and douches now. It's D-U-E. I'm not German, so there's probably a better way to pronounce it than the way I have been pronouncing it. So I'm gonna stick away from that from now. Samer's in the house. Hello, Samer. And we also have, as soon as I click on this, we also have Abhalash. Get out of American bank stocks. I wouldn't say to get out of American bank stocks. I think the big American banks are absolutely fine. There's no issues. I would be probably doing extra due diligence on some of the smaller regional American banks. So if you're in let's say an ETF, for example, I wouldn't worry at all. If you're investing in like Bank of America, I wouldn't be worried at all. But if you're in some little Bank of Maine, maybe I would be doing a bit more due diligence on that. And I don't know if there's a Bank of Maine. I just sort of pulled that out of my butt. How do you short? Oh dear. So freaking Oracle, you may have missed it, but you actually won a membership. So so there you go. You're green, the friggin' Oracle. He probably already knew that he won because, well, he's an Oracle. And we got King a Day in here. Hey, King a Day. Afternoon, everybody says King a Day. Abolish says, I think a ton of ETFs consist of regional banks like ZWK, BMO, US Banks ETF. Yeah, they are good, but keep in mind too, because that's a managed bank, they're doing the due diligence for you. If they see some regional banks that look like they could be in trouble, they're going to get out. They're going to move them out of that fund and replace it with another one. That's the nice thing about an ETF is they will do that for you. And Larry says, I bought some more JDCO on the bad bank news. They're worth their equity. All right. Yeah, and exactly. Here's this thing, though. A lot of these banks that are really low right now, hey, Patricia, they're going to bounce back. They will come back. And it's kind of like these interest rates, if you think about it, they're sort of a double-edged sword. One, they're hurting them, and they're also helping them because they are getting more money in. But the problem is they're creating more bad debts. Bad debts being people, for example, who can't pay their mortgage or, things like foreclosures, debt that they have to write off. So it's kind of a double-edged sword that way. but we're going to have to see how this happens. I have a feeling that with the US Fed, I think their next rate hike will be a no-go. It'll be just a pause. I'm pretty sure they're going to do that. And I think I think Powell even wanted to pause on this one because of the banking issues. But if he had paused, I think even though it would have been the right thing to do, I think it would have caused more panic and more bank runs because people would be like, okay, because where he had been talking such a big game, to sort of step back, that would be a very indicative of there being an issue. And so he didn't do that. All right. Let's see. Sats crypto launch was a huge success. Awesome. Awesome. So those of you who don't know, the friggin' Oracle has a channel, and he does like a live stream all Friday and Saturday nights. And he's very much into crypto, and he's been following that Sats launch and been a part of it. So that's fantastic to hear that. Larry says, Charlie Munger's JDCO is in my top 5 investments right now. Awesome. And that's one of those things. A lot of people like to follow what Warren Buffett and Charlie Munger do, pretty much anybody at Berkshire Hathaway, because they've got that record of success, and they certainly know what they're doing. They're sort of like the Yodas of investing world. And GA says, hi, everybody. And Bleak says, hey. And hey, Bleak, it's good to see you. All right. So that's a little bit with the banking, but here's this really interesting thing that came out, and it's kind of the title of tonight's, is all about personal recessions. So the Canada's per capita GDP, they've released that for the final quarter of last year, and we've now got 2 negative personal GDPs in a row. And what that basically, the Canada's per capita GDP, what that is you take your country's GDP and you divide it by the population. So it has fallen now for the second straight quarter to close out 2022. And you know what? 2 quarters of negative GDP, that's a recession. So, but where this is a personal GDP, it's kind of like we got a little personal recession going on, even though it's not an official recession. Now, one of the interesting things is that these 2 drops they're basically one of the largest drops they've ever seen outside of a recession. And that's not good, because they tend to be a good indication of a country's of their prosperity. Now, why did this happen? One reason that we think is going on here is our population growth. So in 2022, we've picked up more than 1 million people, and 96% of that was actually immigration. So this immigration that we have basically brought on, what it was supposed to do is it was supposed to boost the economy, but it hasn't yet materialized. And part of that is that our recertification rules are taking too long. So you have people like we bring in doctors, but they can't practice medicine until we can recertify them. And that's taking a lot longer than it should take. They need to sort of fix that up a bit. So we do have a lot of people who have immigrated in, and they're just basically in the process of getting recertified. So they're not really boosting the economy yet. So hopefully that can turn itself around, because that's kind of a really interesting thing that has happened. All right, we got Reiko in the house. So let's pull up Reiko. Hello, I really enjoy your videos. I'm currently earning about $12,300 monthly through ETF dividend investments. Holy banana bread, Reiko, you're doing it right. Will I be required to make installment payments to the CRA? Thanks. Okay, well, Reiko, here's where it comes down to. If you are holding those ETFs in a personal account, then yeah, you're going to have to make some kind of payments at least on the dividends that are coming through, because they will get taxed. If you have it, though, in a registered account, so if you're holding it in either your TFSA or your RRSP, then you don't have to worry about anything at all, because that's just the way it rolls. But yeah, if you do have it in a non-registered account, they're going to look at that they will look at those dividends, and you will be paying taxes on the dividends. So what I normally will say is, if you're pulling in that amount of dividends in a personal account, you should be putting some of it away for taxes, because if you haven't, then you're going to have a big tax bill. And that's where a situation where you probably need to call up the CRA and make arrangements with them to sort of help pay off some of it. Now, the other thing too is if you haven't maxed out your RRSP or your TFSA, specifically your TFSA, then you definitely want to be able to use that. And keep in mind, depending on your bank, as of April 1st, we have the home, so the FSHA, so the first time home buyers savings account. So that's coming out, and you'll be able to put about $8,000 in that for the first year. And that would also sort of wouldn't be paying taxes on that 8,000 worth as well. So just a few little things to sort of keep in mind. But the big thing is, hopefully you've got most of that in a registered account so that you're not paying anything on it. But otherwise, you probably need to talk to the CRA if you're making $12,300 outside of a registered account. Okay. And we have you in the house. Hi, Candace. I really enjoy your videos. What's your thoughts on VFV? I'm thinking about taking a large position in it. I do like Vanguard. Vanguard ETFs, I think Vanguard is one of the better ETFs out there when it comes to their management. So I've always been a big fan of them, which is funny now because you guys can look at my account either when I do a one of my videos to share my account, or you can just go onto Blossom and take a look at my account anytime you want and see what I'm holding. I don't currently hold any Vanguard, but I do love the company, which is really funny. And I think VFV, you're probably going to see growth. That's one of the things with Vanguard I find is you're not getting the really high dividends, but you do tend to get a lot more capital growth in their ETFs. So I don't think there's anything wrong with you taking a large position, but keep in mind as well, you want to make sure as well that they've got the diversification. So you can go to the Vanguard site and see exactly what VFV holds. And you want to make sure that it's within your risk tolerance. Then as long as it's within your risk tolerance, it's within your diversification criteria, it's not too shabby. For me, like where I buy a lot of single companies, I try to keep all of my positions at about 5% of my portfolio. But if you're mostly an ETF person, you can take that much higher than 5% without any concern at all. All right. And Reiko says, thank you. Okay. Well, hopefully that information was useful. All right. Let's pull up our next little story. This is a little story. The Canadian CPI report. So CPI actually fell this month. It fell down to 5.2% from the previous month, which was 5.9%. That's fantastic. That's really, really good because where we have paused our rates, we want to see things like this happen so that, the Bank of Canada doesn't start boosting again. Now our core CPI, so it's basically CPI minus food and energy. It fell not as much, but it fell 4.8 from 4.9 the previous month. So that's not a bad thing. CPI, at least inflation seems to be moving in the right direction. Although when you go to the grocery store, it certainly doesn't look that way. But the thing you have to remember too is that when we look at something like this, where we say that CPI fell to 5.2 from 5.9, doesn't mean that prices are falling. It just means that prices are still raising, but instead of raising at a 5.9 rate, they're raising at a 5.2 rate. So we're not out of the water yet, but as long as these prices, as long as the CPI and the core CPI keep moving in this direction, I think that's going to be really good for us. All right. Oh, I should say hi again. Hi, Trevor. The next story is the most exciting story. So you guys all probably have heard me talk about ChatGPT. Now, I actually started talking about ChatGPT before the rest of the masses were talking about it because I've been following, GPT-3, which was where they made ChatGPT all through the OpenAI initiative. So I've been following it for a while because I'm totally interested in AI. Now, I have subscribed to ChatGPT Plus, which basically now gives me access. So I have access to ChatGPT 4, which is really cool. It's like absolutely, it's, I would say it's about 50% better than Chat GPT 3. And I know right now they're working on like GPT 5. So that's just going to blow me away, I think, when we finally have it. But here we have something completely brand new. It is called Radio GPT. So there is a company, they're called Futuri. They're a media company. They have launched this thing called Radio GPT, and they're basically claiming it is it's the first radio platform that is entirely powered by AI. So they want to basically make they're looking to make on-air talent kind of obsolete, and this thing looks like it can do it. So you've got AI DJs who basically can scour the web for anything that's trending. They can find anything and they'll know anything and everything about everything. And in the split second, they can generate scripts for their robot hosts. I mean, this is just absolutely mind-blowing. So they can also, in addition to just doing the radio stuff, Radio GPT can also automate all of the other tasks. So they could do social media posts. They can make videos. They can take their radio content and turn it into podcasts. There's just so much stuff they can do. Now, here's interesting. By April, there are already stations that are going to start using Radio GPT. And one of those broadcasters that has signed up is a Canadian company by the name of Rogers. Now, Rogers has 55 stations across Canada. So that sounds to me like you guys are soon going to be listening to AI. And if you think you're like, oh man, I don't know if I'm ready for that. Well, I'm going to share a link with you guys. Check it out later after the show. But this here is the link for the Radio GPT sample station. So if you go to this, you'll actually get to hear what it sounds like to listen to radio done by GPT. And I listened to it before the show, and it was great. It was fantastic. I mean, they didn't sound like, when you watch that YouTube video that's a voiceover, and you can tell the voice is a robot. It's like, yeah, I can tell, because they're sort of like, they're not pronouncing certain words the right way. They're just getting things wrong. Well, this one didn't. All of the different hosts and voices I heard, I would not have really guessed that they were, AIs. And this is only going to get better. So it's really interesting. Now, even Spotify, they have launched something called DJ, and DJ is an AI disc jockey. So it's the way of the future. You know how when we've been talking about people losing their jobs to AI? Well, hello, bye-bye radio hosts. Hello, AI disc jockeys. So definitely going to be very interesting. All right, let's get caught up with chat here. Hi, Candace. In that case above, when we are using a non-registered account, is it more tax efficient to hold total return ETF like HTX or HCRE, or it doesn't matter? Well, if I was in a situation that I knew I was going to max out my registered accounts, I would probably put mostly dividend in there. And then I would, in my non-registered accounts, because this is the reason why, in my non-registered account, I would go mostly total return or growth stocks. And the reason I would do that is because of taxes. So one, I'm not generating taxes unless I'm selling. Two, any dividends that I do receive in there, they're not going to be as big. So they're not going to impact my income as much. But the other option too is that I can also then manipulate the stocks that I have in that personal account via tax loss harvesting to keep my taxes at zero when it comes to that account. And there's lots of ways you can do it. Sometimes it's just simple as you wait for a downturn and you just move stock A to stock B. They're both down, but you're taking that loss on purpose, but you're just moving it to stock B, and stock B is going to recover the same as your first stock. So you haven't actually lost anything, but you've created you've created a loss that you can then use against gains. And that just makes it so much easier when dealing with taxes. All right. And yeah, and that monotone voice. So yeah, I mean, check out that radio station afterwards. I thought it was pretty darn good. And let's see, we're going to see those IA being manipulated for the big tech. Yes, absolutely. Once again, when we look at some of the big tech, so you take Microsoft. Microsoft has already poured a ton of money into OpenAI. So Microsoft is pretty much already getting a lot of access, and it's really interesting. Even Putin had actually said at one point that whoever wins the AI race is going to control the world. Um, I would like to see AI not be controlled by any one group or any one company. I think it should be. I like the whole idea of open source, but it's kind of moved beyond there now. So that's going to be interesting. Let's see, Reiko, what did you say? Hello again. I checked and qualify. If I contributed $8,000 to the new first-time home buyer account for 5 years and later decide that I don't want to buy a house, would I be able? Oops, let's see the rest of this. Would I be able? To do that, to move that into the RRSP account immediately, or would I have to wait for 15 years after opening the account? Thank you. All right, that's a good question. So with this home buyer's account, here's the beautiful thing. If you qualify for that account, and let's say you've already maxed out your RRSP, well, you want to use that. You want to fill it over its time frame, because then you can move that into your RRSP, and that gives you extra, well, it gives you extra space. You've basically created new contribution room by doing that. So that is a nice little thing that you can do if you're not going to be buying a house. I don't think you have to wait to do that. I think you have to wait. You may have to wait the 15 years, but you wouldn't have to wait until, right until 71. Well, at 71, you no longer have an RRSP. It's changing into a RIF. So, but now keep in mind, this is stuff that's still being, I think it's still being worked out a little bit. Like I haven't seen every single little rule yet on these, but I think they're worth using if you qualify for one. And to qualify for one, this is the qualification. You don't have to be a new home buyer. You just have to have not owned a home in the last 4 years. So if you sold your house 4 years later, you are eligible for this account. Or if you've never owned a house, you are eligible for this account. Or technically, if you and your wife live at the house, but the house is in, let's say, your name, well, your wife could technically come in and get herself one of these. So it really comes down to but if it's in both of your names, then no, then absolutely not. So it's one of those neat things. Or your kids. I mean, if your kids you could probably set one of these up as I don't know if you could set it up for them. You might be able to set it up for them as they're growing. So there's different ways that we have to sort of see how this is going to work out. Now, the interesting thing is a lot of the financial institutions haven't received all the tax information on these from the CRA. So they don't know 100% how it's all working out. That's one of the reasons that even though this starts April 1st, you may not see it until the summer show up at your bank, or at Wealth. I don't know what Wealth Simple's doing. Maybe they're going to get it sooner, or whatever banking institution you use, you'll get it this year. But you may have to hold off a few months until the banks get this all sorted out, which kind of sucks. And Sammer, I'm just going to jump over Larry for a second. You must wait 15 years to dump there we go. I was thinking that. I was kind of thinking that. So that is awesome. All right. Larry says, Regeneron Pharmaceutical. Holy cow. I think I should have a drink of bubbly. All right. Regeneron Pharmaceuticals has a mouse with a human immune system that got FDA approval for COPD. Spent 80 cents and made $9.20, 9 years of blowout earnings, 45% of portfolio, no dividend, massive buybacks. Thoughts? Let me take a look here. So, okay. So you spent 80 cents and it's now worth $9.20. So here's the thing. A penny stock, which is where it was initially. So if it started at 80 cents, it was a penny stock. They have a chance of growing really, really fast. And it looks like this one did. And if you were in on this, then that is absolutely fantastic because, a lot of times it's almost just as likely to go the other way. But if it hasn't, this is great. So at 920, you're not going to get that. You're probably not going to. I won't say you won't, but all likelihood you won't see the same level of growth. You may still see some half decent growth. So that's where you have to sort of look at your own financial ideas. So, for example, myself, if I thought that I was still going to get growth, but perhaps not as much, I probably would look at taking some profits off the table and then maybe look for another opportunity. Or if or if it was a situation where I just really felt strongly about the company, maybe I would stay in at the same time. But I think I would probably take at least some profits off the table, look for another investment opportunity. Right now, I think one of the hot investment opportunities, of course, is AI. But because AI is so hot, you're going to see all kinds of AI startups. It's almost going to be like another tech bubble in a way. Basically, when .com came, you had all these .com companies coming all over. Problem is, most of them didn't survive. And this is probably going to happen with AI. You'll probably see a lot of AI startups, but you want to be sure to be doing serious due diligence before you put any money into any one of these startups, because I think a lot of them are probably going to do the same thing. They're going to sort of fall to the side, and you may have 5 or 6 really good AI startups that, become absolute gold. So let's keep that in mind. And Reiko said, thank you. Perfect. All right. So that was Sorry. I was going to say that was Chat GPT. No, that was Reiko. Avalish says, is it better to keep Canadian dividend stocks in non-registered account? Dividend tax credits. Yeah, you do get some dividend tax credits on the Canadian dividend stocks, but it really comes down to how full your account is. So, for example, if your TFSA is not full, there shouldn't even be a discussion about whether you should be putting it in your personal or in your TFSA. The only kind of example that I do is that when I day trade, I won't put that into a registered account, because you're not supposed to be day trading in registered accounts. So any kind of day trading or shorter swing trading, I will do those in personal accounts. It makes that a lot easier for taxes too. So let's see. Abalesh says, I think Wealthsimple automatically calculates the gains and losses. Generally, yes. Most of them will do that. They will calculate the gains and losses and put that on the tax forms they give you. So that's always a good thing. Most banks will do that. Now, when you're filling out your taxes, depending on what you use, like I've been using Wealthsimple Tax the last couple of years. So normally I give them a login to my CRA, and they go in and they pull all the tax forms for me. So for the most part, they do a lot of the math. So you don't have to do as much and calculate as much, but you want to always double check and make sure that everything is kosher and not kind of messed up. All right. And 9 is in the house. Banana bread. Yes. Now I want a piece of banana bread, a nice hot slice, but oh well, we'll have to talk about that a little bit later. Now Joe Biden was in Canada here a couple days ago. Now he did, they were here. I mean, he was here talking about a lot of stuff, but one thing that I thought was interesting is that he did state that the U.S. military is going to be delivering funds in the spring to Canada's mining sector. You had to apply to get the funds, but they're looking at. Now, I heard the fund account was $250 million, and that seems really, really low. So I don't know if it's like each grant is 250 million. So at that, I would need to take that part with a grain of salt because I'm not sure on the dollars. But I do know that they're grants and not loans. So any of the companies who are given this money, they don't have to pay it back. So that's fantastic for them. Now, one issue that we do have, and that is when it comes to our mining industry, there is a lot of red tape. So if you scout and you find a location for a new mine, once you start the red tape journey to open a mine, it can take 12 to 15 years just to open up a mine. And that's just because there is an insane amount of red tape and bureaucracy that you have to go through. And a lot of the miners have been pushing this back to Ottawa and saying, look, you guys want us to provide all of these critical minerals, but yet you make it impossible to open mines in any kind of timely fashion. So the government has admitted there needs to be some reform on this. So hopefully that is fixed, because we would certainly like to be able to provide these minerals to the world, or to the US right now, who wants to buy them from us. So that's always a good thing. And can you only use the FHSA once in a lifetime? That is a very good question. I don't know the answer to be at 100%. Although logically, I think I would logically say that you probably can only use it once, but I don't honestly know. So I have to look that up. Let's see here. Can the FHSA only be used once in your lifetime, or does it reset after selling a home you use the FHSA for? See, here's the thing. And this is going to come down to the way they write up their rules, but I mean, logically, if you don't dump it after 15 years into your RRSP, why couldn't you do it again? But it's one of these things that we have to get clarification on, and I don't have that clarification. If anybody knows, if anybody has seen clarification on that, drop it in chat right away so we can find out. But I don't absolutely know the right answer, so I don't want to guess, because well, this is finance. we're those, we're all those folks. We're those geeky folks who like math, and we don't guess at things. It's like, give us the right answer. I do have another news story. Interesting news story. Now, this is out of the US, but I assume similar things here. Now, we're talking about no-name and cheaper brands overall. So they have discovered, through surveys and looking at statistics, that the most expensive personal care products, they once held about 31% of the market in 2019. And now they've looked at it again, and those same products are only making up 7% of the markets, because people are now going to cheaper brands. And this is also happening in grocery products. Grocery products, the expensive tier of food, went from 24% down to 9%. While the cheapest tier, so your no-name brands, they grew by about 13%. And I think that's a reflection on, of course, the economy. People are paying too many taxes, and with food being, there we go. Let's get rid of that. With food being so expensive, we're in that situation, I think, where people are they're not able to make that choice to say, okay, well, I'm going to get the Kraft dinner, instead of the Superstore version of it, which is like basically you might get that for 25 cents. Whereas, well, now I don't know I honestly don't know prices anymore, but I'm going by prices pre-pandemic. I know the Kraft used to be like about $1 a box. And then you used to be able to get the no-name stuff for like about 25 cents a box. So maybe now it's like $1 and $5. I don't know. But it's pretty much the same stuff, right? It's not that different. A lot of no-name is made by the same brands that are making the brand name. They just make that no-name brand as well. So it's one of those interesting things. And you can save a lot of money in the grocery store just by choosing some of the brand names. And a lot of the brand names, like if you go to the Superstore, President's Choice they tend to be a cheaper option, and most President's Choice stuff, I find it pretty good myself, but it's just one of those ways that you can save money. And when you save money, it means that you have more money to invest. So that is not a bad thing. Now, when it comes to, just give me 1 second here. We got this. Both brands are unhealthy. Better to get the cheap one. Yeah, exactly. I just chose Kraft Dinner as just a wild example. I mean, Kraft Dinner is not good for you. It's just all pretty much pasta, which breaks down into sugar. So, yeah. Though if you perhaps got the one that has extra cheese, at least the cheese is a little bit better for you. But yeah, even then, it's it's hard to defend Kraft Dinner. So no vacancy. So the Royal Bank of Canada, they have predicted that Canada's rental shortage is easily going to quadruple within 4 years. So that's pretty bad. And we're at the point now that our vacancy rate is just really, really low. It's under 2%. And normally for a healthy economy, we need to have a 3% vacancy rate or higher. And for us to get to that 3% rate, that same report, the Royal Bank is saying that we would need to build 332,000 new units before 2026 to get there. So that's a lot of construction, and I don't see that amount of construction happening, but that's what we kind of need. And the other thing too, keep in mind, right now where we have our immigration on hyperdrive, we got a lot of people coming in, and they're not finding houses. They're not being able to find not even so much houses, but they're not finding places that they can live. So that is causing a lot of issues too. And if you remember when we were talking about the personal recession, part of that too, the fact that immigrants aren't boosting the economy, is some of them are getting here and they can't even find a place to live. And, they're spending so much time just trying to get that worked out. So there's definitely a lot of things that are going on that are a little bit on the silly side. All right, now, just give me 1 second here. Oh, there was a Nanos research poll that I thought was rather interesting. So 2 years ago, they asked Canadians, are you satisfied with Canada? 74% said they were. Now they've done this poll again, and guess how many have said they're satisfied with Canada now? Only 64%. So we've dropped about 10% in just 2 years. Now, Canadians under the age of 35 actually had the bleakest view of the nation. They gave it a D mark. It's like, okay, so Canada only got a D from 35 and under. Now, they asked those same people, 35 and under, well, why? What's first of all, they said, what's good about Canada? And, they gave the standard. They said the healthcare system and our universities were good. When they asked what was bad about the country, once again, this will come as no surprise. They said the Prime Minister, the Senate, and the Governor General. Those were the areas of contention. So holy cow. So that's not good. All right. We're mostly getting towards the end of the news. So if you guys, whatever you want to talk about, throw it in the chat. I will tell you what's going on next week with the world of finance. Next week is actually a pretty light week. So we got, the big thing we have in Canada is on March 28th, the Canadian budget will get released. We'll see what Ms. Freeland has given us this time around. Now in the U.S., we got a bit more. March 30th, the GDP second revision is going to be released, as well as the U.S. jobless claims. Those are coming out on the 30th. And then on the 31st, we have the PCE coming out. That's the personal consumption expenditures. Best way to think of that is it just basically measures what people are spending their money or how they're spending their money. So it is a good indication of the economy overall. But other than that, the beautiful thing for the market is that most of these things shouldn't cause a lot of big ripples. So provided the banks all stay nice and stable this week, there's the possibility for us to have a green week, and that would be nice. Now, earnings-wise, 3 big Canadian companies have earnings reports coming out this week. Constellation Software, Dollarama, and Northwest Health. So those will all be coming out this week, which is kind of cool. Okay, now, what have I got going on this week on the channel? So on the channel, I have tomorrow, I have a different video. I have REIT ETFs. I was like, we don't have a lot of REIT ETFs, by the way, but 5 of them are going to be on the channel tomorrow, and we'll just explain a little bit about what REIT ETFs are all about. So that's coming up on this channel tomorrow. Thursday, you guys voted in the community tab, and it was so friggin' close between RioCan and Scotiabank. But Scotiabank won with 1% of the vote. So we're going to do a new deep dive on Scotiabank and just see how bad things have gotten in their financials with some of the struggles that they've been having. So we'll definitely be looking at that. Now, coming up on Saturday, and this excites me a little bit. I never thought it would, because I did a video on CPP, and then because, I thought, okay, well, to be fair, I'll do OAS, an OAS video that featured GIS a little bit. So I did that. But that OAS video is doing fantastic. And I was just like, wow, it's like, it was doing okay. And then about 15 days after launching, it's really picked up momentum. And I'm like, people are really liking that one video. So next Saturday, I am going to do basically, it's going to be a GIS video. And we're just going to look at all of the different permutations. So for example, what happens, if, one person goes into a retirement home or something like that. So that'll just be the Saturday video. I'm going to throw that out there for all those people who are just absolutely in love with the GIS video. It'll fall in there for you guys. We'll be back here, of course, next Sunday, and we'll do this all over again. We'll find some stories and see what's going on. All right. Now, as I was rambling on, 9 came in. What are your thoughts on American bond ETFs? I hold some for diversifying. And I think it's good to have, ideally, in the olden days, and when I say the olden days, I'm pretty much just talking pre-pandemic, a good diversified portfolio came with a certain amount of fixed income. So I think a lot of people, especially a lot of the retail investors who came into investing during the pandemic, have kind of moved away from that and aren't thinking about it as much. But I still think it's a good thing to have a small portion of your portfolio into fixed income. And I think American bond ETFs are not a bad thing to have, to be holding. They're fixed income. You're not going to lose money on them. They're going to be stable, and they should, in theory, stabilize at least a small portion of your portfolio in bad times. Now, we should be, hopefully, I'm still fairly confident that we're looking at a bull market coming towards the end part of the year. Now, first of all, we have to make sure that we bottom. Now, interestingly enough, I was watching a video the other day. It was actually Meet Kevin, and he was showing some charts, and he was showing this one little tiny drop back in October that went really low compared to the rest. And he was calling that the bottom. I was looking at it, and since then we've been on a very, very slow move back towards the up. He could normally when it comes to Meet Kevin, I find him a bit too doom and gloom for my taste. But I was just watching this one thing, and I was like looking. I'm like, oh, he's got probably just as much chance of being right as anybody else. But I did see the pattern that he was seeing, and I'm like, okay, that's interesting. Now, I'm still thinking that I can't close the door on that bottom, because I still have this feeling like late spring, maybe even early summer, that we might see the bottom then. But I would very much be happy if I was wrong and we were moving back up, because I know in my day job where I do day trading, it's sometimes a little bit easier it's in a situation where if you make a bad trade, instead of taking a loss, when you're in a bull market, you can pretty much just wait and it comes back up anyway, and you can get out generally. So that's kind of my thoughts on that. I'm hoping we've seen the bottom, but we don't know yet. We'll have to figure that out as we go. Here we go. Abalash says, I think KD is around $2 a box. And no name is now 125. Oh, it's not as big of a difference as it used to be. Wow. So yeah, I remember it just being so much cheaper, but I can't remember the last time I actually bought a box of Kraft Dinner. So it's been a very long time. So that is just one of those things that I have to, yeah. It's like I should almost go just for research for the channel. I should go to the grocery store someday and just start taking notes on prices. Yeah, I'm just terrible with that. Like, honestly, I could not tell you right now how much a carton of eggs is, how much a loaf of bread is. I don't even know how much a carton of milk is, or a bag of milk, depending on what part of the country you're in. Yeah, I've got no clue how much groceries cost. The only thing I know is that a box of 12 cans of bubbly, and that's that flavored water. So I drink a lot of this stuff. It's really good. This is the peach. I know that it costs about like between $5 and $6. So something like that. So anyway, so I have decided on that 2000 sub show. I am going to do the Hot Ones thing. I've ordered the Hot Ones season 20 box. So that will give me 10 sauces. And then what we're going to do is, I haven't figured out if we're just going to do regular. It'll be a live stream, so don't worry. You'll be able to see me sweat and have a lot of fun, or maybe not have fun. And I'm going to answer basically questions. Now, I don't know if it's a situation where we'll just go with whatever questions are in chat, or maybe we'll just come up with 10 questions that maybe the community can come up with 10 different questions that we could have that I can answer as I do it. So, we'll keep and we'll even do it this way. We'll have easy questions for the small part of the of the scale. And then we'll put the hard questions. The hardest questions should come after I have the bomb. Now, if any of you guys have ever watched Hot Ones, that's the one that tends to make people have to drink milk because it's apparently really, really bad. So that's kind of interesting. When will this be? Well, right now I am sitting at, let me take a look. I am sitting at 1645. So when I hit 2000, now, if, for example, if something happened, like let's say tomorrow's video just decided to explode and all of a sudden I had 2000 subs by tomorrow afternoon, I have to wait till the sauce gets here. I ordered the sauce last week, and it takes about 30 days to get here. So once the sauce gets here and I hit 2000, then we'll look at it. But yeah, and here's the thing. I'm anticipating, so looking at the way my channel has been growing, the way things have been developing, I'm anticipating it's probably going to be June. But if something does blow up and, we can do it in May, that would be fantastic. I certainly will not complain. So it's going to be really, really good. It's going to be fun. All right. And let's see. Georgie says, I just discovered you. I do really like your reviews about the stock market. If I may ask, would you please do a video review about TXF? So that's the CI Tech Giants covered call hedge units ETF. Awesome. I'll put this on a list here, my friend. And I keep notes of what you guys request, and then I always try to work them in wherever I can. So this is TXF. I'm just put that right down there. In some cases, it can be a stock that we would that may deserve its own full deep dive. Or in some cases, like occasionally I'll get stocks that they're not really, I don't want to say interesting. Sometimes they're a little bit on the smaller side, in which case I might bundle a couple together. But no, this is definitely a stock I think that we could certainly take a look at. And whenever you have time, thank you. Awesome. And let's see. I'm not a hot sauce nerd. I think I mentioned that to you on Blossom. Yeah. And that's cool. I'm not, I mean, I don't mind spice, but this is taking it to a level that I think I'm going to have a very, I think the stream's going to be awesome for the first 3/4 of it. I think that last bit's going to really challenge me, but it will be fun. It'll still be fun. The last time, and here's funny, at the 1,000 mark. So when I hit 1,000 subs, I did a stream for that as well, and at that time, I'm not a drinker. Just put that out there. I don't drink, but I did a drinking stream, so I got a slightly silly, I think, on that stream. So, and it's still up there. If you ever want to go back and look at it, feel free to. In this one, I'm going to get slightly hot, as in my tongue will be very, very hot. So we'll have to see how that works out. Let's see. Jatinder asks, what stocks should we hold in the new FHSA account? Very good question. And this is one of these things where, for me, for one, we've got the tax thing, we got the whole tax shelter part of it. So I think dividend stocks are fine to be going in there. And it really comes down to how much space you have, right? If everything is full and it's just between that and your personal account, in that case, I would go with growth stocks and personal account, and put more of your dividend type stocks in here. Now, I do not believe, and I'm pretty sure on this one, U.S. dividend stocks, you don't want to put it in here. You want to still move those to your RRSP, because this FHSA will not be, well, it's not part of the tax treaty between Canada and the U.S., so you would lose 15%, and you wouldn't be able to get that back, just like in the TFSA. So don't put any American dividend stocks in here. Canadian dividend stocks, yeah, absolutely fill it up. Total return stocks, I think, would be good as well. And it's a situation where, you know what? It doesn't hurt. I would be inclined to look at what stocks are going to, I would almost be inclined to think about total return. The more I think about it, sitting here right now, because one of the issues I would have is if you have a stock that is not going to grow very much and it's just giving you some dividends, you kind of want to grow this, because if you're looking at one point, let's say you're not going to use it as a house, but 15 years after you've done this, you're going to dump it into your RRSP and you're just creating a whole bunch of extra contribution room in there. If that's the route that you're taking, then, if you can grow this thing a little bit, that wouldn't be a bad thing at all. So, and it'll be really interesting. I need to see more data on this. And I also need to make a video on this, to be honest. So I think that's going to be really interesting. But for now, yeah, your dividend stocks are going to be probably fine. But as I said, I wouldn't put your covered call ones. I'd probably just leave those for the TFSA, because it just makes a little bit more sense. But this should also protect you from any of those stocks that do have any kind of return of capital as well. But the TFSA will do that just as well. So let's see here. Prep yourself for it. Oh, that's the thing. I have a bag of chips upstairs that I've been using to try to get myself prepared for it, and it's apparently got ghost pepper on it. I can eat one chip a day. That's where I'm at. One chip a day. And it's darn hot. So yeah, I'm going to probably sweat. I'll probably be, drinking a lot of milk. That's not going to be fun. Let's see here. What expenses are you able to claim for day trading? We need to count it as business income, right? Yes, it is business income. If you are doing it for a living, so let's say if that is your job, you would want to, well, you would basically want to register yourself as a small business, and then you would be able to take a lot of different, things that you could claim for, for your taxes. So if you registered yourself as a small business and you were doing day trading, you'd be able to take a portion of your rent, and you could probably, well, you're also your equipment. And there's a lot of different things. Like, I've known people who've had businesses, and they actually claimed their dog food because they said that their dogs were protecting company assets. I knew their dogs. If somebody broke in to steal company assets, their dogs would have to be able to stop them with licking them, because that's all these dogs did. They loved people. They probably would have helped carry things out. I mean, it's kind of ridiculous like that. Let's see. Don't do the hot ones on an empty stomach. That is probably a good idea. A good idea that I would have probably not seen. So, yeah, I'm going to definitely make sure I have also not a super full belly either, because I think, yeah, the last thing you want is just, yeah. Anyway, on to Sammer. It's not clear about FHSA on the government website. It's saying that FHSA is a mix of RRSP and TFSA. So we could hold U.S. stocks on it, right? And we should be able to. I've seen nothing to indicate that we can't put U.S. stocks in it. Now, it would still behave the same way. Like, you'd still have currency conversions, things like that. It's going to be really interesting. And this is the thing. This is how badly the CRA has done this. Is, as I said, a lot of banks are saying we're not going to have it available for you on the 1st because we don't even have the tax information yet. So hopefully the CRA gets their act together and gets all of this information out, because there is still, I think, a lot of gray in here. And that's kind of why I'm kind of like being very careful, because I don't want to put something out there that either it might seem like it's right, but they change something. And that's just kind of one of these things. But I am going to get all of the clear information as soon as it's available. I will absolutely do a video on this, because I think we need to sort of clarify a lot of it and look at what strategies we can use for it. So I think it's going to be pretty darn good. So I'm looking forward to seeing it. I'm looking forward to utilizing it. Now it comes down to, I don't know if I plan to buy a house in 4 years or 5 years, but I mean, I think there is the possibility down there. So, but even if you're not a house buyer, just being able to fill that up and then flipping it into your RRSP, that could be very useful. Now, keep in mind, though, there are definitely people out there who may look at it and say, well, why do I want to put stuff in my RRSP? Because it's then going to, when it turns into an RRIF, I could lose my GIS or things like that. And it depends on the part where you are on the income spectrum. But I think overall, the FHSA is going to be a very interesting investment tool. And I think there's going to be a lot of uses that we can sort of figure out about it. And don't worry, I'm going to bring those uses to you guys when I figure it out. Wayne Smith says, I have several U.S. dividend stocks. Yes, I get hit by the 15% tax, but I make that up in the 33% current differential gain. All right, that's fair enough. Or and here's this thing, if you really want that 15% back, if you do it in your personal account, you can claim that back in taxes. But, normally if you do have the room in your TFSA, just throw it, or not your TFSA, sorry, your RRSP, then that's a great place to put it, because you're not going to pay any taxes. But if you do put it in the personal, yeah, you're going to get that back. And especially in this case here, Wayne's getting a 33% currency differential gain. So that's not a bad thing either. So it really comes down to, I mean, you have to look at this way. Sometimes if you're going to take a small hit on something, but you're going to make a really big gain on it, that small hit doesn't feel so bad. So if you're playing the game right, there's lots of ways that you can make money. And there's also different ways that you can try to minimize taxes as well. As I mentioned earlier, we got tax loss harvesting on the capital gains. You know, if you register, for example, you're day trading as a business, there's tax implications that you can use there in your advantage. So there's definitely a lot of things that you can do. And it's interesting. I didn't actually do any tax videos this year. Last year I did all these tax videos. And nobody really watched them. But then this year, I see people going back and they're starting to watch my tax videos from last year. I'm like, okay, probably, well, the way I look at it is the videos I made last year are still relevant. So once things change, like I think I did a walkthrough on how to use Wealth Simple Tax because I went and just did my taxes in it and showed everybody the steps. And I think that went well. Let's see. King of Day. I stay away from hot sauce years ago due to heartburn, but I can't wait to watch your struggle. It's going to be fun. Yes, it will be fun. And, you know, and don't worry, I'm going to put like a good dab on each one. I'm not going to like, you know, just put like a little dot. I mean, you know, if I'm going to do this, I'm going to do it full bore because, you know, this is a once in a lifetime thing. So, and the way it'll go is I'm not going to do a 3,000 because with YouTube, you start picking up speed the bigger you get. So I had originally set it up. I'd do 1,000, 2,000, then 5,000, then 10,000. So it would, interestingly enough, according to Social Blade is predicting that I'll actually hit 5,000 by Christmas, which will be fantastic. It'd be great to do another themed video as we get into the holidays. So we just have to figure that one out because that'll be really interesting. Country Auto Garage. If you buy U.S. dividend growth stocks, the 15% is not a big deal at all. Exactly. My recent acquisition, SCHW, had averaged a 28% dividend growth annually for the last 5 years. Yeah, absolutely. And there are some interesting yield ETFs that are starting to pop up in the States that are similar to the purpose ones that we have for like for Tesla, Google, Berkshire Hathaway. And I'm going to look, I found out about these today. So I'm going to actually take a look at them. I might even make a video on them because some of them have, like, for example, we have our Tesla one. Their version of the Tesla one, it's all covered calls as well. But the one that we have gives about a roughly 20% yield. The one that in the US is given a crazy like 50% yield. It's insane. So I definitely want to do a video on this group. I only found out about them today. So look for that in April, probably early April, because I'd like to get that out and done quickly. So that will be really, really interesting. All right. And let's get back down here. OARK. Yes, Sammer. That is one of them. That is the ARK one. And I think it also has close to a 50% return on it. So, Sammer, you're on the ball. So Sammer is on the ball. Absolutely. So yes, it is from that same family. And they've got a whole bunch of them that are still in still basically being set up. So there's a prospectus for them. So we're going to look at those, and that's just going to be fantastic. I'm going to look at some of these, and I'll probably have to buy some. I'm like, holy banana bread. It's just a lot of, there's a lot of returns that are available. Okay. Everyone has a plan until they get punched in the mouth. Mike Tyson, best luck with the Hot Ones Challenge. So thank you. Thank you. Now the Hot Ones Challenge, I will point it out. It's not going to take the place of a Sunday. What I'll do is I'll probably do it like on a Thursday night or something. But don't worry, there'll be plenty of time. So everybody will know that it will be happening. But yeah, so Thursday night, as soon as we hit 2,000 and I've received them, then bang, we'll get it done. And I'm not going to use chicken wings. I'm going to use meatballs just because a little bit easier to be less messy, because I don't want to create a ton of mess if I can help it. But yeah, so it'll definitely be good. Abhilash says, can't you day trade as self-employed individual instead of as a business if you earn less than? You can, absolutely. And there are certainly tax ramifications and tax write-offs that you can use as a self-employed individual. But if you're at that point that you want to turn it into a business, it opens up the doors to even more. And Ray could, oh, excuse me. Oh dear. That's from talking for too long. Okay. HYLD, full of US ETFs, but Canadian ETF. Do I pay the 15% if I hold in a non-registered account? Thanks. The answer to that, no. And that is because you're not buying those American ETFs. Hamilton is. So Hamilton is the one who handles that in this case. So you're perfectly okay. You don't have to worry about that. Let's see. Use a spoon. That's how I sample sauce. Well, I'm going to actually put it on meatballs. I'm going to put a big dab on a meatball. And, that way there we can just have something set up. And I got to figure out how I'm going to set up the camera for that. But I think that will be interesting. And John Lockhart comes in and says, hi, yeah, love your deep dives. Thank you, John. I love doing the deep dives. So it's kind of interesting. Now, I did show, for example, the channel members actually got to see how I do the deep dive. So I showed them some of the tools that I used. So anyway, that's just one of those exclusive videos for channel members. That's something, if any of you are interested in doing, you can certainly do that down below. There's a thing to join, all that fun stuff. It supports the channel and all of that. All right. So if you guys were coming up on the end here, if you guys have not yet hit like, just hit that. It does great things for the algorithm and pumps this out so more people get to see it. But it has been another great Sunday. You guys are all friggin' awesome. And you guys never surprise me. You bring really good questions, and I'm looking forward to next week. So next week we'll rock this out again, and it's going to be fantastic. Oh yeah. See, I'm already flustered. I'm like, this is so great. I don't want to go, but I also need to have supper. So I got two things going. Hopefully spring shows up by next week. I think the other day I saw a spring on the back of a milk carton just to say what's been happening here. I mean, we had a snowstorm yesterday, but anyway, if I start to ramble, I'll never get out of here. So, here. I have to look at this one. On March 16th, TSLY provided a dividend of 90 cents. So that's US. ORIC dividend was 76.91. So these are monthly dividends. Yeah, they are absolutely monthly. And that's why when I was on YouTube and I saw the video of somebody mentioning this, it was actually funny because I saw the TSLY and I was thinking, for some reason, I thought they were talking about YTSL. And I was like, wait a minute. And then I went in and I'm like, oh my God, America, what have you done? This is so great. So yeah, now keep in mind, these are the type of dividends that they may, depending on the company and the way it's managed, they may not be there forever. So these are the type of things that you kind of jump in on and you ride them out for a bit. And the beautiful thing is when you're getting this amount, even if you lose a little bit of capital along the way, you're still going to be ahead of the game, which is really good. And I also have a lot of faith. I do think Tesla, every time people think Tesla's down and out, they come back. I think Tesla's got a lot of growth ahead of them. So I think that's going to be fantastic. All right. And we're going to finish it off with this post from 9. And 9 says, thanks for the stream. Thank you guys for being here. I will be back again next week and we will do this all over again and it will be fantastic. So everybody have a fantastic week and we'll